Hello, I'm Chris Salih, Investment Research Analyst at FundCalibre, and today I'm delighted to be joined by Peter Ewins, Manager of the BMO Global Smaller Companies Trust. Thank you for joining us today, Peter.
Oh, thank you very much for having me, Chris.
So we're sort of 2.5, 3 weeks into the new year, but smaller companies seem to have had a bit of a rocky start to 2022. Could you maybe talk us through why that's the case and what's happening?
Yes, I mean, as you say, I guess it has been a bit of a rocky start. We're very early in the year, obviously, a couple of weeks in. I think the main thing we're sort of seeing in the markets really at the start of the year is sort of almost, if you like, continuing what we had in the back end of last year, which has been a concern in the market about monetary policy being tightened particularly in North America. So you're seeing bond yields, the yields on bonds going up. That's driving pressure on the valuations of equities sort of generally, really, but particularly growth stocks and maybe more riskier stocks. So actually what we've seen in a lot of the markets at the start of the year is that the smaller caps, the smaller growth stocks in the smaller cap market, have been weak. And yeah, as you say, so relative to the larger stocks, some of the larger stocks are holding up a bit better in this environment, which you sometimes get in more volatile sort of trading periods. I think the in the US market in particular, at the start of this year, we've seen biotech stocks weaken again, and that's quite a big part of the smaller company market in the North American scene. In the UK market, you've seen the oil stocks doing well as oil prices have risen further. And again, that's probably an area of underrepresentation in the smaller cap market. So you've seen smaller companies lag there. You've seen less lagging in some markets. So Japanese small cap probably holding up a bit better relative to large cap there. So it's a bit different in the different markets. But yes, it's been a tough start to the year. And we're obviously going to see how the year pans out as we go through it.
Obviously, monetary policy has taken up a lot of column inches. Inflation and rising interest rate. Obviously, there's also sort of a lot of talk and noise. Could you maybe talk about whether that's good or bad for the asset class and the implications, please?
Yeah, well, sure. Obviously, I can't be too definitive on that, but I think the interesting thing is ultimately this is the first time in a number of all of our memories, really, for a number of years we've had to really worry about inflation picking up to the extent that it has. And I think the US inflation number, almost 7% print earlier in the week. So. There's definitely heightened inflation at the moment. I think in the very short term, what we're seeing that doing is driving, as I said earlier, the sort of a derating of the growth stocks in the market. We're seeing some sectors like banks, which benefit from higher rates, sort of down the yield curve as in terms of long-term interest rates. They benefit from that, and you're seeing obviously that sector doing quite well generally in a global sense. You're seeing the energy stocks and commodity sort of related things sort of doing better in this more inflationary environment. So in the short term, that's probably not favouring small cap as a whole. But if you think about it on a more medium term basis, if you are seeing inflation picking up, then that's generally a sign that the economies are picking up. Global economy has picked up as we know from the pandemic, and that's generally, if the economy is picking up, that's generally quite good news for the smaller company asset class, because smaller companies in very high level generic terms tend to do better when the global economy is picking up. So it's not desperately bad news, I would say, for smaller companies. A little bit more inflation in the system. Obviously, what we don't want to see is a very rapid surge in inflation and a need for monetary policy to be tightened very sharply. That wouldn't favour smaller companies, but that's probably not the market consensus view. People expecting that inflation number to tick down as we go through the year. But I think it's what we do as fund managers obviously is look at each individual company on the portfolio and in the asset class, and trying to assess how that company is dealing with inflation on a stock by stock basis. And I think we've already got evidence that a number of the companies on our portfolio are managing to pass through cost increases in their own pricing. So but it does mean that we've got to spend a lot more time thinking and looking back at historical periods of inflation in the past, how companies have managed it.
Okay. Obviously, M&A activity has been quite prevalent in the UK in the past 12 months, but also in other parts of the world. I noticed a couple of your US holdings have been bought out, for example. Is that a global trend, or is it just in a couple of sort of the bigger regions? And maybe just talk about the dynamics of it for the fund? Is it a good or is it bad? You know, obviously you might lose ideas. Do you have a bench ready to sort of fill in those sort of acquisitions?
Good point. A number of points there, really. I think the M&A market has been much more active in 2021, and we saw that come through on the fund with, as you say, we had, I think, 3 stocks in North America taken over, a hospital equipment supplier, a data centers business, and a software business in the last 6-9 months. We had a lot more in the UK, as you referenced. So in the UK market, a lot of takeovers of smaller companies in that market. And I think what's driven that really, particularly in the UK in the last 12 months, was post the end of the Brexit uncertainty, there was a greater level of confidence for maybe overseas companies or private equity operators to actually take the plunge and bid for some of these companies that had got to quite attractively, quite cheap valuations through the pandemic. And so, there was opportunity for that M&A activity to take place. As you say, we've seen M&A in other markets as well. We're even seeing M&A now appearing in Japan with even big sort of companies in Japan like Toshiba sort of breaking up, or not potentially breaking up. Seeing bank consolidation in that market as well in the smaller end. So, we are seeing it as a general global sort of trend. I think the other driver behind this M&A activity is just the amount of money really that's in the private equity industry. Huge fundraisers by private equity fund managers in the last 12 months, giving them yet more money to spend on companies, and some of that is percolating back into takeovers of quoted listed companies. Obviously, some of it's going into private equity type deals, but off market. But some of that money is coming back into the public market. So I think we do see that continuing in 2022, providing there isn't some economic shock of some sort which comes from left field. We think that there will continue to be M&A activity in the portfolio and across the market. I think your other question was around how does that affect the fund? I mean, ultimately, obviously, when we lose companies to takeovers, it's sometimes disappointing. You're losing companies that you really like, that you think are going to do a good job for you over the next few years, and they're taken away from you. Obviously, they tend to be taken away at a nice premium to the previous share price, so you get the upside in the short term, but you lose that longer term return. But ultimately, our job is always to just manage with what the opportunity set we've got. We've got a very large opportunity set in global small cap to choose from. So there's always something to come in. We have got sort of lists of companies that we're following closely that we are, we might be able to bring in quite quickly. On occasions, I would say sometimes you get a takeover. It can be quite good news. It's actually a company that you've actually lost a bit of faith in, and it's actually been, if you like, put out of its misery. And and you're actually not so upset to see some of those go.
And do you, for example, say there's a takeover in an uncertain period of time, would you be happy to sort of hold that in cash for a little while before you reinvest the money, or is it very much a case by case scenario?
Yeah, I mean, there's always, as in any fund, there's always, always got a portfolio, and you've got cash, or you've, in the case of investment trust, we do have a little bit of gearing on the trust, but ultimately we've always got a pool of cash available on the sidelines to do transactions. So, at the moment, in the market in the last couple of months, as we've seen takeover proceeds come in, particularly from the UK, we've actually been at the margin probably directing a little bit more of that money into other markets, because the UK market has done better than some of the other parts of the world. But no, it's not you're not forced to immediately redeploy every proceed that comes in. But we're obviously looking to find those next ideas for the fund.
Okay. Just finally, and although the trust doesn't have an income remit, it has managed to increase its dividends for more than 50 consecutive years. First of all, for the viewers, is that normal for a smaller company's fund or a trust to pay dividends? And secondly, how have you achieved that record?
Yeah, I mean, a lot of smaller company trusts will pay a dividend, and out of the income that's received from the portfolio, providing that more than covers the operational costs, then that does tend to get distributed to shareholders. But I mean, this fund, what's been pleasing in my involvement's almost stretches back 25 years on this fund, and over the years, what we've just sort of seen is that the companies which we've invested in and we tend to hold for the long term, the successful development of a lot of those companies themselves are paying out higher dividends as their profitability grows over the years. So our income stream tends to build. If we're investing in companies that are growing, then that does tend to feed through to our own level of income. From time to time, there will be years where, as we saw in the early stage of the pandemic, where companies paused or cut or even just stopped paying dividends for a period. We did see the income affected that year, but the benefit of the investment trust structure is that we've got a revenue reserve, which is sort of income that hadn't been distributed in the past, sort of in hand, that we can actually use to support the dividend at that point in time. So the company dividends continue to grow through the pandemic, and now the pleasing thing from my point of view that we're seeing is that we're seeing a very strong income in this current financial year coming through, with companies returning to pay dividends. The ones that did pause in the pandemic, now coming, a lot of them paying the same level or even higher than they were pre-pandemic. So we're actually seeing the income rebuild strongly. The other fact that we've seen over the last few years really has been international companies being more prepared to pay dividends. So it's not just income all coming from the UK portfolio, it's coming more widely. One interesting final thing I'd say on the dividend outlook is that tax changes and regulatory changes can impact the outlook on income. In North America, you'll find that not a lot of companies do pay dividends in North America. A lot of companies have spent, have actually tended to do share buybacks, returning capital that way. There is a possibility that there could be a change in the tax treatment of share buybacks in the year ahead, and that could change that dynamic in the North American market. But I think the intention there is to encourage companies to reinvest in operations as opposed to just buying in shares or indeed paying back dividends. But so the things are always evolving on the income side. But the pleasing thing for this fund has been that over the years it's always had a nice level of growing income. It's tended to have income more than the previous year, so that's allowed our dividend to grow.
That's great, Peter. Thank you very much for joining us today.
Well, that's no problem at all. Thanks for having me, Chris.
And if you'd like to learn more about the BMO Global Smaller Companies Trust, please visit FundCalibre.com.